So we're looking at things 4, 5, 10 years out, right? And we believe that if you were to go to sleep today and not wake up for 5 years, would you prefer to sleep on a Bitcoin or would you prefer to sleep on $70,000? Obviously, our recommendation would be like, hey, put a little bit in Bitcoin because that's probably going to play well.
Welcome to Markets Daily for Thursday, April 11th, 2024. Join us as we delve into the insights of the sharpest minds in the investment world, seasoned investors, traders, analysts, and anyone else you would like to hear from. I'm Helene Braun, markets reporter at CoinDesk, once again joining you from Miami. As you can see, same background. I know I could technically be anywhere, but I promise you, there are palm trees behind these curtains. Anyway, we have a great show for you today. Most crypto assets dropped pretty significantly yesterday morning after a hotter than expected CPI report, but that quickly changed and we're mostly seeing green numbers across the board today. We'll find out more about why that is from our guests in a second. But let's briefly catch you up on the markets this morning. Bitcoin is up about 1.5% over the past 24 hours, according to CoinDesk indices at 8 a.m. Eastern Time, trading just shy of $70,000 at $69,989. Ether is roughly flat at $3,523. Meanwhile, the CoinDesk 20 index, which combines the 20 biggest cryptocurrencies in the broader market, is up a little over 0.5%. All right, let's hear from our guest, which is Philippe Bekhazi, the CEO and founder of XBTO. Welcome, Philippe.
Hi, Helene. It's a pleasure to be here.
Bitcoin and other prominent cryptocurrencies experienced a notable drop in price yesterday following the CPI report. However, as the day progressed, a very different trend emerged with green numbers dominating the scene. Philippe, what factors are driving this sudden shift?
Look, on every economic data that we get, there's a knee-jerk reaction to certain pre-programmed things. For example, a high CPI is usually a negative to the economy. Therefore, there's a risk, there's a knee-jerk reaction to sell everything, right? And Bitcoin included. I believe that was a mistake, and I even tweeted about it. I think Bitcoin is in a very nice position right now. It's an upward triangle that I think will culminate into a break, probably shortly thereafter the halving that's coming in about 8 days. So I think it was nothing to be worried about. And I'm going to talk about Bitcoin specifically versus the other risk assets, or equities, which can be at times decorrelated. Ethereum tends to do the same as Bitcoin, and it's a very correlated market in general. So, but Ethereum is on the lows versus Bitcoin. Bitcoin has been outperforming the last year or so. So economic data can be difficult to predict, but it also can be difficult to trade because I believe that Bitcoin currently is in a nice Goldilocks era in the sense that higher inflation should be technically good for Bitcoin. Lower inflation should also be technically good for Bitcoin because the Fed would come in and likely be able to cut rates and therefore increase liquidity in the markets. So I think we're in a no-lose position right now in Bitcoin. I say this carefully because obviously never have no-lose situations, but we're positioned to be in a fairly bullish. We're fairly bullish about Bitcoin and the broader crypto markets.
You just mentioned the upward triangle. Is this a trend you've been seeing, and can you explain to our listeners what that means specifically?
Yeah, I mean, the last I would say a few months, Bitcoin has been trying to hit or break new highs. It's had a hard time around 74,000. It tried a number of times and got rejected from it. But if you look at the trend, the lows have been higher. And so you basically have this kind pattern that seems to imply that eventually that top, that 74,000 sort of wall, will be broken, and therefore we'll see new highs, and I think meaningful new highs.
Coming from a traditional financial background, would you say Bitcoin still trades like a risk asset, or has it moved away from those characteristics?
It's certainly still very correlated, at least in the short term, right? So if you look at things in different time patterns, you'll see that the correlation is not the same, or it's maybe the same, but for different reasons than we think. Obviously, in the last 15 years, Bitcoin is up millions of percent, or it's up a lot. And of course, equities are up also, but the force of the move, the momentum of the move, has been much higher in Bitcoin. So obviously, like yesterday, for example, we had the CPI print, and well, I didn't take a look at equities, but I would be pretty sure that equities sold off in the same way that Bitcoin sold off. It's a knee-jerk reaction. It's these are very correlated assets in the short term, but in the long term, Bitcoin has its own characteristics, it has its own flows. We're going to have the halving that's going to have the rewards by half. That means that there's going to be half as many Bitcoin to be sold by miners if they were to sell out all of their Bitcoin starting in 8 days and a couple hours. So this is going to be quite meaningful, I think. And it's hard to predict and it's hard to price, right? People say, oh, it's already priced in. You can't really price in this because this is something that takes time. It's a supply and demand imbalance. And you can't really price that up front, right?
If you're saying you can't price that in, how is XBTO then positioning itself, or your clients for that matter, ahead of the halving?
Um, we believe that Bitcoin is a long-term play. It's a macro play. And therefore, obviously, we have clients that are traders that trade in and out on technical reasons. But generally speaking, we like to play for the long term. So we're looking at things for 5, 10 years out, right? And we believe that if you were to go to sleep today and not wake up for 5 years, would you prefer to sleep on a Bitcoin, or would you prefer to sleep on $70,000? And obviously, our recommendation would be like, hey, put a little bit in Bitcoin because that's probably going to play well in your favor over that time frame.
So, Felipe, we've been hearing more and more chatter from potential issuers about the SEC that they will most likely decline an Ether ETF. Is this outlook something that traders are slowly pricing into their trades? And how much of an impact do you think this potential rejection will have on the price of ETH, given how far in advance we've been getting clues here?
And that's a great question. Look, ETH is very correlated to Bitcoin. So if Bitcoin breaks new highs, Ethereum in dollar terms will do well, right? However, versus Bitcoin, I think it will trail if the ETF is not approved. Now, it's going to be very difficult for the SEC to fight again this battle because it has the similar characteristics as Bitcoin. I mean, there's certain things about Ethereum that have changed over its life, right? It went from proof of work to proof of stake. It's got a staking method now where you can earn kind of yield on chain. So there are certain things that one could argue, but the problem is that the Ethereum is already trading on the futures exchange on the CFTC basically approved. It's on the CME. And so, and other regulated exchanges. So it's going to be difficult for the SEC to claim it as a security and to basically deny it. I mean, they basically opened themselves again to being sort of sued. And I have a hard time seeing how a judge would find different circumstances and find a different opinion.
So, are you saying you think the SEC is going to approve the ETF because they don't want to fight this fight, or?
I'm not saying they are not going to fight this fight. I think they might fight this fight. I think the result, though, is the same. And so it's a question of time, right? Do I expect the ETF to be approved next month? No. Do I expect it to be approved by the end of the year? Yes. Or high
Got it.
likelihood.
Got
Yes.
it. Let's move to the Bitcoin ETFs really briefly. My colleague Amotaj reported that Hong Kong is likely going to approve a spot Bitcoin ETF next week. What is the significance of that in your opinion?
It's highly significant. Obviously, the US market is the biggest market in the world in terms of capital markets. So if you want an ETF somewhere, you want it in the US, which we have, and BlackRock has been obviously doing extremely well with it, among others. But Hong Kong is definitely good development. Anytime you bridge traditional finance to digital, to blockchain finance or crypto finance, as we call it, and that's what we do at XBTO. That's a good thing, right? That means that you're opening up the economy of a sort of what used to be a closed-end economy, right? It used to really trade with itself, with now a much larger economy, the real economy. And that's why you're seeing a lot of real world asset tokenization. These are all part of the same trend, right? This is very positive. And I'm very happy to hear that it might be approved in Hong Kong, because obviously it's a big market and it's close to China.
How do you expect volume and flows of these potential new ETFs in Hong Kong to compare to the US based spot Bitcoin ETFs? There's obviously massive capital over there too.
There's massive capital. I think it will be interesting to see how much of it versus the US. I'm pretty sure it will be way south of it. I mean, in terms of, I could not exactly tell you how much of it, 20, 25% maybe. And this is kind of shooting in the dark a bit, but I don't suspect that it would be larger than the US.
All right, Philippe, thank you so much for joining us.
Thank you.
That was Philippe Bekhazi, who's the CEO and founder of XBTO. And that's it for today's show. Thank you for tuning in, and let us know if you like this episode, and feel free to leave a comment wherever you're listening or watching. Until then, tune in every day to get your latest market news from me, Helene Braun, and my co-host, Jen Sanasi.